TGIF Warriors, how's everyone doing today? I hope fine, hope you had a good week. So yesterday during the webinar, we were warning about a break in the S&Ps, took out some type of trend line. I don't have the line, I'm sure we'll see it with Blake. Every other break, except for this exception here, we had a failing rally, but every other high, we would just pull back and make a new high. Everyone see that with me? Same thing here. So what we have here is the potential of a failing rally today. There's your 4-hour chart. Actually, crude is making new highs here. So if crude could reverse, and there's still, I believe, a little bit of divergence left. I think this is one of the supportive elements in the market. But I can say this, under yesterday's low, we'll be taking out this 4-hour moving average. We're back, I believe, higher on the week. Yeah, higher on the week. So for us to have a negative week, we have to start trading back around yesterday's lows, which, you know, anything can happen on a Friday, especially if this, and I'm trying this and doesn't look that great. We still are diverging in crude up here at new highs. Crude, you know, everyone's looking at this breakout. This was the previous high. So this is really going to seal it, just like the S&Ps next time, if it happens, back under 55.55. And I just noticed for our subscribers, we just got a push alert about resistance in the Dixie. And I have to say this, you know, we had a head and shoulders formation breakout. It's negating it. So, I mean, it's good or bad from here. So that's just an example of the great research. You know, I saw the push alert come across about the Dixie being at resistance, and I pull up the 4-hour and right here against one of my moving averages. So if the dollar can push through here, because I was actually expecting one more decline back towards initially 96, even 96, 95, 85. But I'm starting to think if we take out this low, that may change the picture. So the dollar as well is at kind of a make or break for a continued correction. I'm not bearish a dollar. And you could tell, you know, even if we get another jiggle to the downside towards 96, you see a move like this and it just doesn't give up much ground, you know. I mean, perhaps I didn't do the fibs here, that this correction that, you know, I guess, you know, Steve could talk to it because I'm not an Elliotician, would look like some type of ABC back to this line that I had off these previous highs. So, you know, kind of checking a breakout and following through to the upside. So the dollar just doesn't want to give up the ghost. I think it's going to be the key to a lot of things that are going on in the markets here. And even the NASDAQ has a chance putting in a lower high. You see NASDAQ's still the weakest compared to the S&Ps. This is your daily and your 200-day. We really haven't really closed above it. Maybe these two closes compared to the S&P, which is still well above it. I'm wondering how bulls that you know, are getting long up here are going to rationalize being back under the 200-day. Should that happen, that's a 27.47. So, you know, a little less than 40 handles from here. So the thing to keep your eye on is crude. I can't chase it up here. Looks like it may have even gotten back to this broadening wedge line here. Let me draw it. Where are you? There. Yeah, right there. Okay. So this could be a critical area right here in the crude. And as you can see, even though we've surged above here at the line, RSI still under 70. So, you know, this is really an important line in the sand here. So keep your eyes alert for a potential reversal in crude. I think it's imminent, and especially if the dollar is going to blow off. So the dollar is going to blow off. I can't see crude not being affected by it, but we'll see. Although I do think there's a chance that we peaked in the S&P, and it's early. It could just be beginning because when you look at the recovery, and I was watching CNBC, and there are some guys I think that are excellent, and this recovery in the S&P and NASDAQ, you still have all the darlings from last year down anywhere from 10 to 20%, I think, with the exception of Netflix, which was the leadership for so many years in the market. And I know I heard that the common stock, the ones that people weren't paying attention to, have really driven this rally. So if you look at this NASDAQ, and I'm not talking a crash, but why not, some type of retrace of this move, that could take you back towards these levels here. Maybe for a right shoulder, maybe this is the left shoulder here, and that's around 64 and a half or so. So that would be a big trade. Metals, I don't know what to do with. Kudos on Steve's call up there in the gold. That that could have been it. And just one lesson on the metals here, guys. And I've talked about this a lot, and it has to do with the silver. Okay, so anyone that was shorting the silver here, thinking we had a top, where do you think their stops were? Right. Okay. So they put their stops over 16, 17, maybe a penny over. I know a lot of people do that. Stop doing that. Okay. Give your stops more tolerance, because everyone who had their stop here. Oh, nice call, Amanda, on pound kiwi. All right, so everyone who had their stop here, they're out. They took whatever loss they had, and if the market's 34 cents under that level. So people say, hey, Ben, how are you? Head and shoulders pattern with a right shoulder forming. Yeah, I could see that. Okay, everyone's abusing my Skype this morning. Thank you, Ben, for that input. But the lesson is, don't put your stops right in too obvious of a place. And if it is going to be an obvious place, if you have reduced leverage, you could give it tolerance. You could put it a dime. You could put it a dime over. Oh, are you serious, Blake? Sing, or that's where I'm going to be in prison. Okay. Sing the dime song? I don't know that one. Okay. All right, so I'm talking. Oh, you know what? My guitar isn't here because I'm moving next week, and I started moving some stuff, and I brought my axe over to the new place. Anyway, I could do it a cappella. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Sorry, Olivier. I did
beautiful.
It.
That was beautiful.
All right. Hey, any chance to sing?
Yeah, I know.
I figure
I can get you going.
All right, bro. How are you?
Good. It's Friday, so I'm happy about that. I think we all are. So, it's we have Canadian retail sales coming up. It's actually a pretty busy day. It's a long day, and we got a lot of Fed speakers today. We've got we've got President Trump, President Xi meeting at 2:30 Eastern. I really don't know what to expect out of that. If it's a kiss the baby type of event, or
Xi and Trump are meeting.
Xi and Trump are meeting today. Yeah.
Where, in Vietnam or something?
I don't know.
Oh, wow.
You know, they're meeting today,
Funny.
so it's
Okay.
yeah, it's you know, and so we should get some sort of you know, I guess, well, one of the reasons why the markets are optimistic today is because, oh, you know, Trump and Xi are meeting, and we expect positive you know, developments out of that. So, you know, the market's cheering it a little bit this morning, but we'll see. You know, we'll see what happens. But first things first, we have Canadian data coming out, and as you guys know, yesterday I was long the dollar Canadian, and I bought it, you know, down in the, I want to say like my average was around 70. I sold it yesterday just around the 132 level, like 132.05, and ironically, I picked it up this morning at 132.05 ahead of the retail sales. Now, I have a tight stop. I might get stopped out. You know, I mean, if it's, I hope it's a weak number, because if it's a weak number, then the dollar Canadian will, you know, spike above the 132.50 level, and then we could, you know, trade up towards 133. I think this longer term inverted head and shoulder pattern is valid at the moment. Now, you might look at this pattern and go, well, Blake, the right shoulder is lower than the left shoulder. And that's fine to me, because it's what we call a complex inverted head and shoulder pattern. And that's when you have a slanted neckline, which we do. So you got a slanted neckline, you know, slanted shoulders here. So it's all, you know, it's all valid. Now that doesn't mean it's going to play out like that. It just, you know, I won't get really excited about it until, you know, you break the neckline, you know, so that would mean a move above 133.20 ish, you know, somewhere up here would make it bullish, at least, you know, back up towards, you know, the channel top. And again, these are, you know, guys, this is, you know, stuff we talked about yesterday, but I'm, you know, reiterating it ahead of, you know, the Canadian retail sales. I mean, we have a big up channel. I mean, this is a 4-hour chart zoomed out, so you can see, you know, from 2000. Is this 4-hour? Yeah, I guess it is. This takes you all the way back to 2017. You know, this is like almost 2 years worth of data here. So you can see this big channel that we're playing inside of. We are closer to the lower end of the channel. One of the things that's really interesting about the dollar Canadian, and I'll talk about that right now, is that crude oil, and Coach, you just pointed out crude. Crude's surprisingly bullish, right? Crude oil is like, yeah, I mean, it's a beach ball. Yeah, it is. It's definitely a beach ball. I've been a little skeptical about it.
Me too.
Because of the high DSI reading, but it's Friday, so, you know, crude tends to go up on Fridays for whatever, you know, godforsaken reason it does. Excuse me, it does. But we tried to break this trend line yesterday. You know, and matter of fact, I could have argued that we were, well, I guess we were just on it. Yeah. And then today, just about 2 hours ago, I'll give you or actually it was about an hour ago, I'm going to give you the analysis of crude here. If you're a ForexAnalytix subscriber, let's read the basic technical analysis that was released less than an hour ago. 25 minutes ago, crude has hit the hourly resistance in what could be viewed as a triple top or just a bullish wedge. We have to assume the latter, which means the bullish wedge, unless the uptrend line is broken at 56.50 or so. So you're looking at it and you're going, oh, look, 1, 2, triple top, but we're actually in a bullish wedge where you got higher lows and consistent highs. So the upside breakout was likely. Fast forward, yeah, we got it. It literally happened like, you know, probably about 5 minutes after I sent that analysis, because this was about 20 minutes ago. So then we broke out. So now we're breaking out to the upside. the reason why I point this out is because now let's not sit here and go, oh God, you know, here's crude, now it's going to $90. It's a bullish break of the bullet. It's a bullish break right now, and it could take us to, let's just keep that hourly chart on there. Let's clone that and let's move it like this. Something like, yeah, probably like that. You know, it could take us now higher towards, you know, 58, 59. That would be channel resistance, right? If it made its way up there. But also, you don't know what happens today. I mean, we could get a epic fail here and then break through the trendline support. That would be an epic failure. If anybody's long crude, it's their stops are now below this trend line. There's no doubt in my mind. So I don't trade crude, but if I traded crude, I would be thinking, if I was a contrarian thinking, okay, I'm going to short crude, I would be thinking, man, if we get below this trend line, I'm going to short the crap out of it. Now, that's
how about if it just negates a breakout?
I mean, you could start there. You could,
yeah.
You know, I mean, because chances are, if it goes to fail here, it's going to fiddle faddle around here a little bit, try to wiggle you out. Right. So you take a little trade if you want. You can take a little trade short and then put your stop above the high. But really, it's where the dramatic move
low will do it.
Yeah. All the stops are below here. So this is where, if you're a contrarian trader, this is where you hit the gas, trying to go counter trend. Again, I'm just trying to give you guys a little bit of heads up on, how you might, if you trade crude. I don't trade crude. I've traded a couple times in my life and I don't like it. It's very hard to do.
Blake, just and this is the last time I'll interrupt you for now, anyway, for today. This is the first time that crude has made a new recovery high, and so far the S&Ps have only put in like a fib possible failing rally. I think it's the first time I've seen that in a while. Maybe there's a message there.
Yeah, so here's the S&P, and we were breaking out of this ascending wedge, and I was thinking yesterday, okay, here we go. Whoops, I didn't want to do that. And then we pop back up. I think we're probably retesting like a 618 or 50% retracement right now. There's a
right.
I'm surprised that the S&Ps did not have any downside follow through.
I'm always surprised.
I know, it's like it's like. How can you not be surprised? It's the market continuously grinds higher. So it's going to be interesting to see what happens from here. I'm in the camp that as long as we stay below this 2820, this is a bunch of resistance up here, then it's going to fail up here. The relative strength was trying to break down from the, you can see the 4-hour RSI yesterday, and it gave us a little bit of a move, and now we're just back testing. Here's your RSI. We're back testing the breakdown point. The wedge is basically retesting the underside of that. But I totally got off track. But the reason why I was talking about crude in the first place is because the dollar Canadian. Ironically, the dollar Canadian moved higher as crude oil moved higher. Now that's usually the opposite happens. Crude oil moves up, the dollar Canadian moves down, because the Canadian dollar will strengthen with crude. That doesn't mean a whole lot to me right now, other than it's bucking its normal correlation. What's going to make a big difference, or twofold, if the Canadian retail sales are weak, and I'm just hoping they are, because I do have a small position in the dollar Canadian. If Canadian retail sales are weak and the dollar Canadian actually breaks this, and this trend line is not perfect, so it's not. I'm taking it all with a grain of salt, because if you want to get specific on your trend lines, it's gonna it doesn't really it doesn't all match up. You know what I mean? I guess you can do that, but bottom line is if we break through these highs, that's going to be pretty bullish to dollar Canadian. And if we get a reversal in crude for whatever reason, man, that's going to really spell a lot higher prices for the dollar Canadian, and that's what I'm hoping for. I'm hoping today that the Canadian data is weak. Pola's was pretty dovish yesterday, and that's the reason for the dollar Canadian move from the 131.70 to 132.40. He was pretty dovish, and so if you just sprinkle on a weak retail sales out of Canada, that's going to make it even better. So the number that we're expecting is negative 0.5% on core retail sales to be flat. If that number disappoints, the dollar Canadian is going to be a lot higher. And like I said, I've got my stops in, and I hope I don't get stopped out, but obviously it's the sensible trade right now. And I'm just going to say this because of crude oil and because of the rally and risk, the sensible trade is to be short the dollar Canadian. That's the one that actually makes more sense currently. Price action suggests that this is what's going to happen. But what makes sense is that crude is strong, risk is stronger. Risk, when I talk about risk, I talk about stocks. Stocks are stronger. Crude is stronger. The dollar Canadian should go down from here theoretically, but it's not, and that price action is telling me that this is going to be a really strong move if we get weak Canadian data. If we get weak Canadian data and crude oil to pull back a little bit, this dollar Canadian is going to just bust a move. That's what I'm hoping is going to happen. Like I said, if I get stopped out, I get stopped out. I made some money yesterday, so and I'm basically, my stops are not at break even, but if I lose a little bit of money today based on the money I made yesterday, I still come out net positive for the week on the dollar Canadian. So that's what I'm looking at. Now, a couple other things really fast. The Kiwi bounced off of trendline support. You can see this big trendline support, 78% retracement. We bounced off of that. The New Zealand dollar actually sold off pretty aggressively yesterday, based on the RBNZ said a cut is more likely than a hike, and I think it was the RBNZ that said that. I got to check my thinking really fast on that, but yeah, anyway, the Aussie came in under pressure, or excuse me, the Kiwi came in under pressure, and then we have a situation where we've bounced all the way back. I'm not bearish the Kiwi, not yet, but if we break below these lows, then that's going to be something. Then the Aussie, is bouncing back a little bit. I mean, we're at the highs of the session right now. We have a bear flag pattern, but the Aussie is kind of coming back a little bit here. And remember, this is on the heels of a potentially positive move from or a potentially positive outlook from the China-U.S. meetings that are happening. One last thing I'll talk about, and I'm going to hand it over to my colleagues here, is the dollar yen. The dollar yen is still struggling. We came out of this ascending wedge like last week or early this week, February 15th, so that was last week, and we haven't done squat. The dollar yen hasn't done anything. It has just been sitting up here, which I'm actually quite surprised with. The reason why I say that is because I'm surprised that we didn't see more dollar yen weakness with S&P weakness yesterday. It just kind of sat around, but we're not rallying with the S&P either. So I'm not really too sure what's moving the dollar yen. It seems like you got bonds rallying right now, so yields are coming down. So that's affecting the dollar yen to a certain extent, but I don't know what else is really moving it. But right now the dollar is under a little bit of the dollar that was just rallying is under a little bit of pressure, and it's still very choppy. I mean, here's the dollar yen, or excuse me, the dollar index. It's extremely choppy in the markets. The euro was just slumping to new lows, and then it just rallied back. The pound was just selling off, and we're going to revisit the breakdown point here at 130, I think. So pretty messy markets at the moment. But we got Canadian retail sales. Maybe that's going to jar the market a little bit. I'm going to pass it over to Steve and Stelios. Good morning, guys.
Good morning.
Hey guys, I'm going to pass it over to you so I can get ready for this data. But I just want to say, if you guys are in the New York area, or you can make it to New York, make it there. March 10th through 12th, but you guys are going to really be, most people are going to be there on Monday for the Money Show, and make sure you visit, our friends at Forest Park FX. They are the guys that can help you get ForexAnalytix
Cool.
possibly for free. So
it's like a big party.
And help you find the ideal broker for your needs.
Yeah, exactly. There you go. All right, guys, I got to roll. Have a great one. Thanks, everybody. TGIF.
Thank you, Blake.
Have a good weekend. Have a good weekend, Blake.
Thanks, you guys too.
Today, man.
Bye-bye.
Hello, Steves, plural.
Hey, Coach. How are you?
How are you, man? Any hope we get a failed breakout in crude, Steve, or what?
Listen, the fun part here is in crude is that I don't know how I did that, but this is what we drew back here, which is like almost, despite having drawn something like that, like, a prediction of what's going to happen in the future,
you didn't believe it.
I never went long. No, I'll tell you why. Because I was envisioning a deeper pullback in crude. So I was envisioning that this pullback here is going to be at least, to 50-50, if not, slightly lower than that, like, 48, 70, 49.
That's what I was
So, I never got, a deep enough pullback to participate in that. Now, if we go down to the 4-hour chart, since you're asking about it, my opinion hasn't really changed. And from what I saw in the discussion we had yesterday with Grega, he's also not very convinced that, this was enough of a pullback. I'm monitoring this expanding triangle. We are once again approaching the resistance here. And, I would really want to see a deeper pullback. Now, on the other hand, there is no doubt that we've broken out. But, it's like palladium, palladium in a bigger extent, to be honest. It hasn't really given us the opportunity to enter with a favorable risk-reward ratio, right? So it is what it is. I mean, I ride this beauty up, for the first leg. I really wanted to participate in another one, but, we never got a chance. So, I wouldn't definitely buying it up here. I'm actually monitoring, as I said, this trend line resistance. Let's see if something is going to happen from there. As you very well mentioned at the very beginning, we know very well the quite strong association between risk and crude. So, it's not by accident that we're seeing this rebound in the S&P today. Having said that, if we have a brief look at the short-term charts, this is the NASDAQ. This looked like a wedge. We broke below it yesterday. So let's see if we're going to get some continuation today. The same deal with the S&P here, ascending channel, and within it, a little wedge.
It's a weak bounce, Steve. Compared to crude, every other time crude's made a new high, indexes have led it. And this is a little change in leadership here with crude doing it without the S&Ps. I think there's a message.
That is true. That is true. That is very true. And it might as well, be a message there. Now, if we go back to the basics, having to do with the dollar. Now, if we have a look at the daily chart of the dollar, dollar might have even found a low, because this is what we drew on the daily chart. Perhaps a pullback towards this area, and then we decide if we're going higher or lower from there. Now, on the 4-hour chart, there is still the potential. I was looking for a little bit, of a lower price, a little bit like towards 96 to 96.
Yeah, this candle, Steve, and this, like I told Blake last time, I'll interrupt you during your presentation.
No problem.
I got a push alert.
I'm going to interrupt you both because we have Canadian data in 5 seconds.
Okay.
Sorry.
That's all right.
When we're done with that, you can continue, Dale.
Let's go to USD CAD on the 4-hour chart. Here we go. USD CAD still in what looks like a triangle.
Exactly in line. Minus 0.5 expected, minus 0.5.
Okay, let's see where the market is going to settle. So far, more or less nothing. This is a 4-hour chart. So what I was saying before on the USD CAD, before we continue to what we were saying, USD CAD still looks to me like being in a triangle. Of course, triangle support is arbitrary completely because we didn't have a second point, but I was thinking that might be a triangle. That might be the triangle support that we're seeing here. So, so far nothing. And unless we break out from this triangle, I think that, I wouldn't be committing to either side of the market. Now, Coach, go back to what you were saying about the DXY. Here's the chart.
Oh, it was, right when I opened the show, I got a push alert, about the dollar being at resistance, and look at that reaction. I mean, just an example of, I wasn't paying attention. I came in the same way as you. Wow, the dollar is stubborn. It looks good. And then I get the push alert, and, it was a great fade just for a scalp. And, and that's just, one example of many that happened all week long, all week long.
This is quite a week for our candle so far, because, as you said, it was looking quite strong, and now we're getting rejected from the 50 simple moving average on the 4-hour chart.
And I had a chance to react to it. You see, that's what I'm saying, the value.
Yeah, indeed, absolutely. And we don't in an arbitrary fashion select support and resistance levels. We monitor the market. We monitor averages, previous, most importantly, previous reaction zones, Fibonacci's, and then we decide on that. But let's not.
I wouldn't have the same performance, and a lot of people think I'm okay, pretty good, sometimes, and I wouldn't be here.
In singing or trading?
In
singing or trading?
In singing while I trade. I've improved a lot, Steve, in the last 2 years, hanging out with you guys.
That's good to hear. Speaking of which, we do have indeed an anniversary quite soon. 2 years of
April,
phase.
beginning of April.
Yeah. Okay. That's actually great. They flew by it feels like it was yesterday, right?
Like a decade.
I think we should celebrate that by having a face session where we all sing, and not
and no viewers, for that session. Okay, so Stelio, we don't want to steal your thunder, so go ahead. What did we have?
There's not much of a thunder, to be honest. We had some European data out of Germany, and also European CPI. CPI came in at 1.4%, in line with expectations. It's still below 2%, so it's very hard to see the ECB raising rates anytime soon, especially since the global economy seems to be turning lower. We also had.
Really curious to see what the ECB is going to do when we go to the next recession, since they're already going to be in negative. I'm really curious.
Oh yeah.
They're going to go more negative, Steve. Float more supply, or at least float more supply negative.
There's been quite a lot of debate if beyond a little bit of negative will have any effectiveness. And there have been several studies, and there is a big debate, and a lot of people believe that going lower than a little bit negative is also going to have a lot of adverse effects. Of course, anyhow, having negative or zero rates has adverse effects, which unfortunately, since they're longer term, the central bank seem to want to completely ignore. People should not forget that interest rates are in essence the price for money. So when you're setting the price for money, there are repercussions to that. But this is a bigger macro conversation. So go ahead, Stelio. We have this data in line.
We had the German GDP confirmed that second reading at 0%, so narrowly avoiding recession. That's for Q4 last year. And then we had business expectations and IFO business climate. They both were weaker than expected, so we get more negative data out of Germany. It's really not looking rosy. And we also had some news out of the usual Brexit circus. Michael Barnier, the chief negotiator for the EU, made some comments today, and he said he's more worried than before on the potential for hard Brexit. But also he said that we cannot exclude the possibility of a delay to Brexit. The market didn't like it, so sterling has been on the back foot today, giving up some of the gains of the past few days. And like Blake said, Trump is meeting. I don't think he's meeting Xi. I think he's meeting the head of the negotiating, the trade negotiator, whatever his name is. But anyway, there is a continuation of the negotiations, and we see how that goes. And that's about it, I'm afraid. There's not much more to say there. There are 5 Fed speakers today, so it will be interesting to see what they're going to say. And as I said yesterday, or was it day before for the FOMC minutes, I really don't see what can make these FOMC members turn in any way hawkish. You know, they can only be neutral or dovish the way I see it, but obviously you never know. But one thing's for sure is this, like I said before, the global economy seems to be turning, and it's definitely not very good news for central banks, especially the ones who have rates at 0. So there you go. That's it from me.
Okay, nice. So let's see. Let's see what questions we have. 5 Fed speakers. Yes. Take a look at.
Brian, our friend, is saying Trump is meeting Liu, whatever his name is. So it's not Xi, it's the other guy. But
yeah, I know it's the top. I didn't want to interact before. It's the top. If I remember, it's the top China negotiator. It's not Xi.
That's correct. Thank you, Brian.
Do you have a view if stocks pull back, then crude will do the same? Yeah, most probably it will do the same. You know, there's a very tight correlation between crude and risk, so yeah, it's quite likely. And anyhow, you know, crude as we were talking about before, both crude and, you know, particularly US stocks are quite overblown, you know, in the short term. Now, having to do with the pullback that you mentioned, Stelio, in the pound, I think, you know, the best reaction we found in the crosses, in which case, you know, pound Aussie, very nice rejection from the 88.6 and the nice acceleration lower. I think Amanda caught this, or perhaps it was, you know, one of the other 3 crosses. Pound Kiwi, I was looking at this as a potential breakout, but, you know, big reversal from this resistance zone. As you see, you know, it's very important for me. Zones are very important because, you know, this zone has reacted multiple times as support resistance, and once again, it proves its value here with this rejection. And, you know, pound Kiwi has turned quite aggressively lower, and it seems to want to break down below this broken trend line once again, in which case...
Yeah, I heard Amanda called that out. So here's a gal who takes, you know, 4 days off, gets right back in the saddle, and comes up with a great trade that most people weren't looking for. Are we lucky to have her, or what?
Absolutely. Amanda is a gem.
Yeah. Anyway, nice call, Amanda. If you're around.
Now, Euro Aussie, nice rejection from, you know, we had already drawn this as a potential triangle, so a nice rejection from this triangular resistance. To be honest, Euro Aussie, from a technical perspective, looks more clear to me. I would consider this as a consolidation before at least one more leg lower. So I would definitely favor. I mean, from a technical perspective, I think Euro Aussie is with Euro Kiwi quite clear. One of them because we had one leg lower, a triangle, and I'm expecting one more leg lower. And Euro Kiwi for the simple reason, as you see here, that we got another rejection from this descending channel. So I think Euro Aussie, Euro Kiwi, both from a technical perspective, looking good for more downside. So I think this covers those crosses, you know. And now we can switch. Let me see. We had a question. Oh, if I'm of the same opinion still about what I think about the Aussie yen. Yeah, so far yes. I mean, if this was indeed, I was monitoring this as a channel. We broke below it, and now we are retesting this horizontal support resistance area and the broken channels support. If we go to the
so even weaker bounce than the S&P. So the leadership has been crude, followed by S&P, tertiary bounce in Aussie yen.
Yeah, and if we go to the daily, one of the reasons I liked it, and the fact that I like it doesn't say anything, right? I mean, I like what I see. That doesn't mean that it's going to work every single time. But what I like here is that
you told me you liked me. Now what's it worth now, man?
Let's keep that between us, Coach.
All right.
I mean, you never know. My wife might be listening.
All right. All right.
So we had this nice move lower. We had a weak RSI reading. We got a rebound that actually found resistance in the RSI, at 60 or whatever it was, not even 60 perhaps. And then we got another double top potential here at previous trendline support and a very nice key reversal candlestick. So, the fact that we're seeing a small bounce today doesn't really change absolutely anything in my plan, right? That doesn't mean that my plan is going to play out. It's never a given. But has anything changed since yesterday in me liking the downside in Aussie yen? No, absolutely nothing. So I'm still sticking to this position. If you're a ForexAnalytix member, you know where I have my invalidation, my stop level. So it is what it is. I mean, if it's going to play out, absolutely fine. If not, it is what it is. So you mentioned that initially, and I have to say, Coach, that this is quite an aggressive reaction from the 88.6 in gold. Actually, yesterday we completed an evening star formation exactly on that level, right? I mean, this is a very nice evening star formation on the daily chart, which is quite a strong reversal.
Back to the flag breakout.
And at the same time, this also completed a 3-drive pattern, right? Because we have, let me draw it, we've had higher high, 3 peaks with RSI diverging, both of those times. So I think that it's quite dangerous trying to buy it here. I know that yesterday Grega was thinking that perhaps there is one more push higher missing. And if that is to be the case, we're currently testing previous high here. So if that is to be the case, if gold wants to push higher once again towards this trend line and this 1360 level, in my opinion, it has to do so from here. Okay, because if it actually pushes lower from here, then the situation becomes quite a lot more complicated, and the chances that this is a tradable high, will increase substantially. Let's also have a look at silver. Silver, on the other hand, in danger of having posted a double top formation. When will we know if that's the case? In my opinion, if we break below 1560. Okay, in that case, we can be looking at this as a double top formation and more downside following. So this is an interesting divergence as well, because while gold kept pushing higher, silver never managed to close on a daily basis at a higher high. Okay, so this will also be a very nice indication of a divergence. So I'm really closely monitoring at the metals because they both topped more or less where I was looking at, and quite a few signals that something is changing. Now, having to do with copper, I had warned you in advance that if copper does make it above 287, you should be looking for a continuation, because this is a major level. So we've already moved a decent amount, and if you actually played this breakout, you're already like 2 point something% in the money, in which case you can trail your stop at break even. Now, of course, there is always the possibility when you see a breakout to at some point see a pullback to retest the breakout area and then a continuation to the upside. The implied target should be somewhere here for this rectangle. Since it broke out to the upside, we should see an extension equal to its height. So, expect something like that. Now, if we keep on pushing higher without pulling back, then perhaps a pullback is not even going to make it down to the breakout level. It might just make it to this horizontal support resistance area and then continue higher from there. So this is the plan with copper. I think it's quite clear and quite easy to follow. This is the way I would play this. As simple as that. Now, very briefly, because they're not. Even though I'm long and I'm doing very well, I still don't favor so much, cryptocurrencies as an investment opportunity. But I have to say that the fact that we're seeing another triangle, like this one, this is Ethereum, by the way, it tells me that Ethereum should at least push higher once again towards 160 previous high, if not higher from here. If you have a look at Bitcoin, you're going to see a very equivalent formation here. This is also a triangle. I would also expect a continuation higher. So cryptos, I think, should continue to do well in the days ahead. And, we see what, we take it, one step at a time. I'm now more than 20% in the money in Ethereum. It's half a position, but still, that's like 10% on a full position. So I can't complain about that. I mean, it's made my month and more than that. Let me see if we have any questions.
We let everyone know about it, man.
Oh yeah, we told them in advance. Yeah, we told them in advance. Yeah, absolutely.
Yeah, so I mean, you can use on even if you don't believe in Bitcoin long term. Steve, a chart is a chart. It's a chart.
Exactly. I believe in technical. I believe in technical analysis, right? Yeah. And technical analysis gives you several edges. Some of them are debatable, although in my opinion they're not, because once you get to the point that you can make money trading the markets consistently, then you don't have any reason to doubt it, right? But I can tell you one thing for sure: what is without doubt, and even from the worst advocates of technical analysis, is that technical analysis at least gives you a trading plan. It gives you an area that that you're wrong if price passes it. And it also gives you targets. And,
you know what also gives you, Steve? It gives you the ability to trade any asset class or instrument, because the patterns you just showed, you could have had IBM.
Yeah, they're universal. They're universal.
That could have been IBM. It could have been, a currency. It could have been a bond. It could have been an ETF. So,
indeed,
so it gives you the flexibility to roam from asset class to asset class, instrument to instrument, and that's an important thing to be able to do.
That is very true.
The only difference is a leverage on the instrument or beta.
Yeah, that's one of the reasons why I don't understand people that get stuck to trading like 2-3 instruments. Because, for example, let's say that you're trading Euro USD and something else. As you said, patterns are universal. So, what does this thing tell you? That, you don't really want to invest your money here. This is Euro USD, right? Why would you want to be choosing sides in this market, right? I mean, it's a nightmare in my opinion. Why should I invest capital in this? I have absolutely no reason. I mean, okay, Ethereum looks good, fine. Ethereum is going to be, you know what I mean? USD CAD looks good. USD CAD is going to be. I mean, whatever.
That's a good point. It tells you when to do to not waste your time in ranges that are just go on forever.
Yeah, exactly. I mean, why would you want to chop yourself up in a range, right? Why would you want to just cross your finger and wish that you're going to finally have some movement in something that is stubbornly refusing to move?
Meanwhile, stock indexes have faded quite a bit, Steve.
Yes,
just during our show here today.
Yeah, I can see it. And to be honest, this rebound, I didn't find it very compelling. how can we rally on hopes that there's going to be a US-China deal without even knowing what kind of a US-China deal that's going to be. I think this is all, BS. I think that sooner rather than later, when the US-China story is going to be over, the markets will revert to fundamentals, and fundamentals currently don't show,
I don't want to get
for a rally.
political, Steve. I broke my promise. I've interrupted you another 10 times, but I know we don't like to get political, and I'm not talking about liking someone or not liking someone, but it's hard for me to conceive with Michael Cohen testifying next week, and they brought him in to talk to him. There's going to be a lot of stagecraft. The Mueller report, there's talk. It's very close to being finished, even though we're not going to know what's in it until, Congress subpoenas probably Mueller. But it's hard for me to believe it's not going to have an impact. If this was a Trump rally, if there's any threat or, at least reduced power, and he starts losing some of his base, all you have to do is go back to what the markets did during the Nixon process, the Watergate process, and they didn't perform well. Anyway, just some, food for thought.
No, I totally agree with you. But of course, the markets have more reasons not to perform well besides the probability. I don't know how low or high it is for a Trump impeachment. Personally,
so a Trump rally, why not a Trump correction?
Yeah, personally, I wouldn't put much weight in the potential for Trump getting impeached. But I don't really care that much, because I believe that the market is going to have serious fundamental and financial and economical reasons to not perform well in the months ahead. Yeah. So that's A to Z. That's the most important thing.
Yeah. So this would be more about psychology, and then people extrapolating that friendly programs of deregulation and tax cuts, and benefiting the different class of people instead of what the Democrats want to do, like happened in Greece.
Yeah, speaking of which, Trump, in my opinion, and this is not a political comment, has been a big disappointment in what fact. I'm not going to stay at all at social issues, etc. I don't even live there, so it's not my problem. But I'm going to tell you one thing. Trump promised, in essence, more deregulation and less of a government. And we've seen actually government spending go substantially higher while we're having tax cuts. And I'm all for tax cuts, but what you expect is, instead of trying to fund by getting more loans, by indebting the country more, you expect to see some government spending cuts and then give that to tax cuts. Oppositely, we've seen a lot less deregulation and actually government spending going higher. So this is completely unsustainable, because, for example, we are having, let's assume that we're going to have a 3% growth for 2018, which is in doubt. I think that we're going to end up having a year of 2.8, 2.9, something like that, which is exactly what Obama was producing, regardless. But at the same time, getting that by having, in essence, 6% more debt, as a percentage of the GDP per year. So in essence, you need to produce like 3%, let's say, growth. You need 6% of debt in comparison to GDP, and that is not sustainable, right? Because the issue is not producing, growth by going much deeper in debt. It's producing growth by, theoretically speaking, at least not increasing your debt while the economy is in a growth cycle. And we're seeing.
When do you think we hit a tipping point on this? This goes back to Ross Perot, and both parties have been lying about budget deficits and social spending and everything and out of control. But, now people are saying, oh, I've seen people on CNBC, Steve, say, well, people are just making too much out of the debt. It's not that bad.
Really?
And, yeah, I've seen, some think tank people saying that. I'm wondering, when does this come home to roost? What would be the catalyst?
In all honesty, whoever says that should be forbidden from expressing any opinion about the economy ever. I don't care what kind of university degrees or diplomas or PhDs they have, because it's ridiculous. In essence, it's a replication of this time it's different. So for all the history of humanity, debt mattered, but don't worry, we found
this time.
We found a tree that produces fruits out of nothing, and this time is not a problem. This time that will not matter. Okay, if it doesn't matter, why do we keep track of that?
Okay, so what's the tipping point in the dollar index going to where some of the super bulls are talking about 120, or what some of the dollar bears are looking for 60? Which is I think there is
no way that the dollar index is going to go to 120, and this is not a prediction. This is not like an FX prediction. I'll tell you why I'm saying that, because there is no way that the dollar index is going to approach 120 without the economy imploding completely. So no matter what is needed, the economy is not going to sustain that kind of a level for the dollar, and the Fed is not going.
Not only ours.
It'll
I agree. The emerging.
It will hurt. Also exactly. It will also cause the emerging markets to implode. Yes, exactly.
Yeah.
Absolutely.
All right.
Absolutely.
So that may be the catalyst for what you're talking about. So it starts overseas and washes ashore, instead of us being ground zero.
Do we have a guest? Do we have a guest today?
No.
Okay. I have something to show you then. Since we don't have any more questions, I have something to show you. Do you remember that some time ago I played an interview from Gundlach?
Oh yeah, yeah.
Yeah, I did that because oppositely from people like Peter Schiff or whatever, Gundlach is considered a very, very reliable market commentator. He's considered the bond king by all market participants, like all fund guys.
Yeah, our guest yesterday, was talking about what he learned from Gundlach. So
really?
Very well respected, and Vince Lancy is a pro in his own right. So he mentioned Jeff a few times yesterday. So yeah, go ahead.
So that's actually good to hear, because I actually yesterday, and I completely forgot about it, I just remembered it now, I actually uploaded his latest interview, which is it's not long, it's quite interesting to listen to. So let me say in advance that if some of you are on mobile devices, this is not going to play for you, but in the vast majority of devices, it's going to play with sound and everything else. The vast majority of devices are supported by GoToWebinar. Now, if you see that the video is not like playing for you within 30 seconds, I wish you all a good weekend. But if you really care to listen to what Gundlach had to say just a few days ago, which is extremely interesting, and you don't have something better to do, I suggest that you stick around for it, and then we can close the show. So let's assume that we have Jeffrey Gundlach for an interview, right, Coach?
Yeah. Okay.
Okay.
I think I've tried to get him, but I ask everyone. I'm not afraid to know. I invited Donald Trump and Peter Schiff. That was great, man. And what he didn't say, and I really respect. So corporate, really, that's ground zero. Corporate bond debt and then national debt. And when you think about it, and he didn't mention it, the corporate debt problem is compounded by financial engineering of borrowing money in the corporate bond market to pay dividends and stock buybacks. So they basically leverage. They leverage
big part of the buybacks at the worst possible prices, right?
Yeah. So I mean, it's like they put their company on. They're not using less leverage. They're using max leverage.
Yeah, exactly.
To prop up the asset price.
So as you see, the bond king said 2 key elements. You forgot to mention 3 key elements. You mentioned 2 of them. You forgot to mention 1. Did you hear what he said? Remember how long ago I said that? He said that the short-term rates might not go up because the Fed controls them, but he's unsure about the long-term debt. And then the interview goes on. I stopped it here because, in essence, then he goes through the same thing that he just said in detail. But when he mentions again the thing about rates, he said, okay, let's assume that the Fed can cap the short-term rates because it's doing the transactions there. Okay, fine. But, will it be compelling for somebody to be buying then, when we get to the next recession, when he predicted that the US debt to GDP is going to be, the deficit in essence is going to be like 10% at least. In my opinion, it might be north of that, but let's assume he's right and it's going to be 10%. He said, will, the rates that we currently have be appealing for people to be buying into the 30-year bonds, the 10-year bonds, the 20-year bonds? And he said, I very much doubt it. That's what he said.
They may not even be able to control short-term rates. I've seen.
They might, but if they have a chance to control something, it's the short-term rates. We know that as a fact.
Because you could have a liquidity crisis. I don't think they could control LIBOR and
no, they can't.
Euro dollars, not the euro FX.
No, I know what you mean.
You could have a liquidity crisis where short-term rates, and I've seen it before, where they went up to 16, 18%, and that's that's going to be majorly deflationary, and maybe that happens with a dollar crisis in the other direction.
Although dollar crisis is going to be inflationary for the US, right? Because if that manifests what he's saying, and we get like a major bear move in the dollar, that might be more than enough to counteract against the usual deflationary pressures of a recession, because the currency devaluation might not only make up for it, but it might go a lot more than that. In which case,
Shakespeare said, "May you live in interesting times." We're certainly in that zone.
We're at the precipice, as it seems. Yeah, indeed.
What a great week, Steve.
Indeed.
I learned and earned this week. Anyone else out there learn and earn, or at least learn, or maybe just earn and not learn? That's okay. Maybe it just dropped into your account or something. But I guess that's a wrap for us this week.
I want to wish everybody a nice weekend. Monday, Tuesday, Wednesday, I'm not going to be here. I'm going to be in Frankfurt.
On my way back. I saw the car. My mother would say in Yiddish, "Use it gesundheit," which means in good health. Use it in good health, Steve. Enjoy. And why don't you wrap it up with our tagline?
Don't just count your pips, count your blessings. Have a wonderful weekend.
Okay, everyone. Take it easy, guys. We'll see you Monday. I have a strong interview lineup starting with Jim Welch on Monday. Adios, and do your homework over the weekend. And if you haven't yet, subscribe and navigate our platform. Take it easy. See you, Steve.